Hey guys, welcome back tonight. This is the second half of my daily update, and hopefully you had a chance to watch the video I just posted a few hours ago. That was all about yesterday's price action, and this video is all about tomorrow's trading ranges. We have a lot to cover. That video from earlier is in the pinned comment below. Make sure you watch that if you haven't. And we have a lot to cover in regards to tomorrow's trading ranges. We do have Boeing reporting earnings in pre-market. We also have Meta in after hours. And at 2 p.m. we do have the FOMC rate decision. And at 2:30 we do have Jerome Powell speaking. And if you haven't had the pleasure to trade an FOMC day, then you are definitely in for a treat. The trading ranges for tomorrow are very wide, and there is a lot that we need to know about. So make sure you have your coffee ready and you're ready to dive into these charts. I'm going to sneak my intro in here and let's go check out tomorrow's levels. Alright guys, so let's get to it. Starting in SPY, tomorrow's implied move is between 535 and 549, and that is from options. The 30-day average volatility is actually less wide, so we're not going to use that today. And the implied move on Thursday's contract is between 533 and 551. The implied moves for the next 2 days are really wide. And to the upside, the first level to look for, and it's actually a combination of two, we have the 50-day moving average and then that 35 EMA. And as we head into FOMC tomorrow, I have a feeling that we are going to stick very close to these two levels until about 2 p.m. when we get that rate decision, and then 2:30 when Jerome Powell starts to speak. That 50-day moving average is likely going to be in focus. So keep that in mind. And then we do have the resistance still right here at 547. And that has been a level since last Thursday, and then Friday, and then Monday, and then today. We had 4 trading sessions of 547 being resistance. And that is near the top of the 30-day average volatility. Remember, we're taking it a little bit wider. Options are taking it to 549 as the top of the implied move. And then above the implied move for tomorrow, we do have that island top gap. Island top gaps can be very strong resistances, and that is this up gap right here with this down gap right here. This is from last Monday and last Wednesday, and that is right above us. And then we also have the 1 hour 200 moving average and the 30-minute 200 moving average. So a ton of resistance just outside of our implied move tomorrow. And the implied move actually lines right up with the bottom of that gap there. And then on Thursday's contract, 551 is the top of the implied move. And then to the downside, if we do trade down tomorrow, we do have this level right here, which was where we filled the gap today. And that was support last Thursday. And then we saw that up gap from there going into Friday of last week. And then today, that is where we bounced. Once we filled that gap, we bounced back up. So that is at 538.5, so around that however you need. And then just underneath that, we do have this gap right here that we did fill most of the way last Thursday, and we do have a little bit open right there. The bottom of that gap is at 537, a little bit under 537, and that gap goes back to right here. This was FOMC in June, so really interesting that we have FOMC tomorrow, and we are back where we were trading in June right before FOMC. So really interesting gap just underneath and at the bottom of the 30-day average volatility. And then the bottom of the implied move from options is 535, and then 533 on Thursday's contract. And I see something sneaking in right there. That looks like the 4 hour 200 moving average. It is, and that is just underneath all of that. We are heading into the trading day tomorrow with bearish momentum right here. Though at the very end of the day, you could see that Stupid Willie hooked right here onto this green line. So keep an eye on right here and also that usually coincides with the 35 EMA. So if we do find a little bit of support there, we might be able to break up above the 35 EMA and above the 50-day moving average. See, I wasn't joking. There is a lot to look for in tomorrow's trading range. So that was SPY. Looks pretty dangerous. Let's take it over to QQQ. The implied move over here is between, oops, I put a little arrow there, is between 448 and 466, and that is from options. The 30-day average volatility is a little bit wider, 447 to 468, and the implied move on Thursday's contract is between 446 and 468. And I did a double take when I did this one, $10.85 on Thursday's contract, so 2.37%. And then I remembered that VXN is at 24, so that does make sense. We have really big ranges tomorrow, and to the upside, the first level to look for is that 35 EMA. That 35 EMA, since we have been off of all-time highs here, let me zoom back out, so all-time highs right here, then we did see that divergence right here and a lot of weakness. That 35 EMA has been a steady resistance. So here we had trouble holding it, then we gapped down. Then when we swung back up, we had trouble holding it here, and then we gapped down. So coming up to it tomorrow, if we have trouble getting over it, we might get pushed back down and retest this 4-hour 200 moving average. But if we do get above it, then the top of the implied move tomorrow is 466, and just a little bit above that, we do have this level of resistance that we have seen since last Thursday, and that is pretty much right at the top of our trading range for tomorrow. So that is 467.49, and round that however you need. If you're buying options, then round down. If you're selling options, then round up. And then the implied move on Thursday's contract is 468. And just a little bit outside of tomorrow's trading ranges and Thursday, we do have a lot of resistance. The 50-day moving average, it's kind of hard to see because it overlaps with a lot of these levels, but it goes right here to right here. So it goes right into that gap. It cuts right through this previous support level that was right here, and it actually goes even further back right here. So that 50-day moving average is right there on top of that. And then above that, we have that island top, which is this up gap from last Monday, down gap from last Wednesday. We also have the 30-minute 200 moving average, which is officially trading underneath the 1-hour 200 moving average. That is another bearish signal. So we are just stacking bearish resistance on top of bearish resistance, and that is just a little bit outside of the trading ranges for the next 2 days. So if we do have a strong bounce here off of this 4-hour 200 moving average, and we take it up to the top and maybe even higher, just know that we have a potential strong sell level just above us. So then to the downside, again, we have that 4-hour 200 moving average. We did see a bounce there last Thursday, and then today we got underneath it, got right back up. After such a big drop as we have had, you would think that maybe we'd see a little bit more of a technical bounce here, but of course a lot of tomorrow is going to be dependent on FOMC. And that 4-hour 200 moving average is going right through our trading range. It will be in focus tomorrow. If we lose that level, we do not have a whole lot of support. This level right here could be support. This is where we filled that gap today and bounced back above the 4-hour 200 moving average. That is right at 554. And then if we break that, we really don't have a whole lot. 448 is the bottom of the implied move for tomorrow. 446 is the bottom of the implied move for Thursday. And then let's zoom out and see what this dashed line is here. Okay, so then the next support level that we have outside of the trading range is going to be right here, and that goes back to May 31st, and that is at 443. So intense trading range tomorrow. If you are new, there is nothing wrong with sitting out tomorrow. This is definitely intermediate to advanced trading range here, and there is nothing wrong with being cautious and waiting to see which direction the market takes after FOMC. All right, so that was QQQ. And taking it over to SPX, the implied move over here tomorrow is between 53.80 and 54.95, and that is from options. The 30-day average volatility actually agrees with that completely, so 53.80 to 54.95, and the implied move on Thursday's contract is between 53.60 and 55.10. And to the upside, same as in SPY, we do have this 50-day moving average and the 35 EMA combo. Those two levels could definitely team up and hold us down, at least until FOMC. If we do get above that and maybe see that as a support going later into the day, we do have right here, this is where we saw resistance since last Thursday. Every day and every time we came up to that level, which was at 54.85, we got pushed down. So every day and even today, we hit that level and dropped. So 4 trading days of hitting that level, and we're back underneath the 50-day moving average. So that is near the top of the implied move, which is 54.95. What did I say this was? 54.85. And then the top of the implied move on Thursday's contract is 55.10. And above our trading ranges for the next 2 days, we do have that wild level of resistance, and we have that island top gap, which is this up gap from last Monday, this down gap from last Wednesday, and where they overlap, we do have the 30-minute 200 moving average and the 1 hour 200 moving average running right through it. So if we do manage to take it up near that level tomorrow or Thursday, definitely think about taking some profits. And then really fast before we move to the downside, ES futures right now are up 0.49%. So that takes us to about right here. So the 50-day moving average and the 35 EMA could actually be a level to the downside to look for. And then underneath that, the next level to the downside is right here. We did fill most of this gap today from last Thursday going into Friday, and we left a little bit open. So if we drop, that has a really big chance of being support. That is at 5,400. And then underneath that, we do have another support gap, and the implied move is within that gap, 53.80, and that gap goes back to FOMC of June. So I believe it was right here that we had FOMC. We had a bit of volatility. We hit that 35 EMA and took off. So that gap from June FOMC is where we are back at, and that is where we have the bottom of the implied move for tomorrow. And bottom of the implied move for Thursday, 53.60. And if we start trading down after tomorrow, then just know we have the 4 hour 200 moving average, not in tomorrow's trading range, but we do have it coming into view, and maybe that's a level we see later in the week, maybe even next Monday. So that was SPX. And then taking it over to IWM. IWM has definitely been a force lately, and the implied move over here is between 218 and 227. That is from options. The 30-day average volatility, a dollar wider in each direction, 217 to 228, and then 217 to 228 on Thursday's contract as well. And to the upside, we do have a couple smaller resistances here. We saw this right here today. I like to use where the bodies are, but you can use the top of the wick if you want. The top of the wick actually lines up more with where we've been seeing resistance earlier last week, and that is at just under 224. And then we do have this other resistance right here, just under 225. So if we do swing up tomorrow, keep an eye on these resistance levels. And if we get above that, 227 is the top of the implied move. And we also have this bear gap right here. You can see when we did make those highs recently, we came right up to that bear gap and pulled back. So that bear gap goes back to 2021. I'm going to take it back to the 5-year chart right here, and that gap goes back to right here where we did make previous all-time highs. That was in November of 2021, and then we shortly after that we gapped down, and then when we came back up to that gap, that was resistance, and then we had that huge drawdown of 2022. And then when we did come back up to that level just the other day, you could see we pulled right back. We didn't get into that gap at all. So that gap is right here at the top of the trading range. So previously seen as resistance, that is right here, just underneath the top of the implied move for tomorrow. And then to the downside, we do have the 35 EMA. It has been trading pretty flat in the past 2 days, and price action has been flat around it. So keep an eye on this level, and we need to see which way it turns. And if we see it start turning up, then we're going to get some upward momentum. Look up. And if it turns down, then look down. And the next level underneath that is right here, just above 220. We did fill this gap right here partially and just left a little bit open right above 220. So that could be a support. And if we drop down further, then the 30-minute 200 moving average is coming into view. It is right at the bottom of the implied move, and it'll definitely be in tomorrow's trading range. And the 35 EMA and the 30-minute 200 moving average are getting close to each other here, so we have been consolidating back, and we need to see how those two levels react. Do we find support there and move higher, or do we break down and fill some of these gaps? And if we break the 30-minute 200 moving average, 218 bottom of the implied move, and 217 on Thursday's contract. Lastly, we have the Dow Jones DIA. The trading range for tomorrow based on the 30-day average volatility is between 402 and 412, and the implied move on the week is still between 398 and 413. And right now we are sitting right at where we've been seeing resistance. This is Friday, and then today we saw that level twice and then got pulled back down. So resistance is currently at 407.50, and then the top of the trading range takes us to 412 if we do have a big up move. And then to the downside, that 35 EMA, we have been holding pretty strong above that level, and if we break it, the 30-minute 200 moving average is at the very bottom of the trading range. At least on the day, I would think that that would hold us. And it's so funny, without having daily options over here, I do have a little bit of a hard time analyzing this, at least how it relates to day trading, but hopefully that is enough to be sufficient to trade tomorrow. And then before we call it a night, let's go take a look at Meta. We have Meta earnings tomorrow in after hours, and the implied move for Meta tomorrow is, let me go see. All right, so let's take this to the 1 day, and the implied move for Meta earnings, it is a big move, $43.77, so almost a 10% move, 9.5% move for tomorrow, and the implied move is between 419 and 508, and that is from options. And then above us we do have the 35 EMA, and also this down gap that we did see last week on Wednesday. So a bit of resistance here to the upside, top of the implied move at 508. And then to the downside, we do have the 1 week 35 EMA, and then the 1 day 200, let's just call it the 200-day moving average right here. And then the bottom of the implied move for earnings for Meta is 419. So $43 implied move for Meta. That's what I've got for tomorrow, guys. Have fun, trade safe, make sure you take profits when they're out.